It's right Central. We're in the studio here with on the TV Randy show Williams, who is the founder and CEO of Keiretsu Form, and
bleach blonde guy.
The bleach blonde guy. That is. Welcome to the Best of Investing. I'm Edward Brown, your host. Here's our format. A bunch of guys sitting around a bar. There's no bar. Having drinks. There's no drinks either. But we're talking business, and you, the audience, are listening in. The Best of Investing is actually a radio show that has been around since August 2010, and it airs every Saturday on Fox News Radio, 9:10 a.m. at 1 p.m. Now, we're not a political show. We're strictly business, so everyone will be happy with that. We'll have various speakers, guest speakers, attorneys, accountants, economic advisors, business coaches. I have great co-hosts with me, Mark Hanf of Pacific Private Money and Brian Burke of Praxis Capital. Now, the cool thing about this is that you're actually getting to see scenes behind the scenes. Whoops. That's the phone ringing. Edward Brown here.
Hi, Mr. Brown. This is Ryan with Merrimack Capital.
Ryan, you're absolutely a very important person I need to talk to, but I can't right now because I'm recording my radio show. Ryan,
thank you.
It may be, if I don't reach you today, I'll reach you tomorrow. Or, I mean,
Monday.
Monday. Thank you.
Thank you.
Sorry about that. That'll have to get edited out. If you're going to talk to Mark, don't do this. What you do is you pivot like this.
Like that.
You've got to keep your mouth near the mic.
So we all have headphones on because we're recording a radio show that is going to be airing on the air on radio. But in addition, you get to see what happens during the commercial breaks, how we prepare for the next segment. And Mark, how do you determine the interest rate you charge your borrowers?
Oh, okay. Until they start to crack.
Like this.
If I like their face.
Makeup, please.
Yeah, I'm into
Makeup.
Okay.
It's too hot in here.
Yep. So it's 15-minute ride.
It's a lot of fun. There's going to be a lot of levity because I like to try to throw a little bit of humor in there because, you know, just business by itself sometimes gets a little boring. So you got to always kind of break things up.
So Stefan, for like gold jewelry,
No, remember, his name is John.
Actually, John.
Stefan, yeah, but he goes by John.
Okay, got it. Sorry about that.
My mother's confused.
We're going to cut to our first commercial break, and just so you, the idiots.
Oh my gosh.
I didn't really. I'm Edward Brown, wishing you the best of investing. Are you ready? Let's go.
I mean, inappropriate.
Well, how about when I introduce you, I'll say, okay, you know, what pearls of wisdom do you want to share with us today?
That's great. That's great. That's perfect.
a great one.
And then we can talk. Then we go right to the first question.
Okay.
So what is it that your firm does, just to give Mark and I a little bit of background?
Sure. We work with high net worth families and private foundations in the San Francisco Bay Area. I work with about 40 clients managing about $500 million in assets, primarily in the stock market.
How many clients?
40.
And at 500 million?
Yeah.
I want to be one of those.
Me too. Me too. So, and so we help them make smart decisions about their money and help them deal with family wealth decisions and the psychological issues that come up with having money and how to deal with your family members and how to invest it well and carefully.
You know, I just figured out that that's 12,500,000 average per person.
Could be. I don't know.
That's a heap bunch of money there.
Yeah, that's a lot of money. So,
Wow.
But well, I have some large foundations. I manage all their investments for. You know, biggest clients over half of my business, which is great for me. But so that's my focus, is helping people that have accumulated wealth understand the benefit of protecting it through a diversified investment strategy, and actually having a strategy, because too often people, they don't have a strategy. It's the most important thing in life is you're managing your wealth, and people are terrible at it and like to talk about it. It's emotional. I like to talk to the kids about it, and it usually screws up everything.
Okay.
So
Got it.
anyway,
All right,
that's it.
cool.
You guys ready?
All right.
Because we'll talk about, leave
Yep.
that on the air too.
Yep.
Okay. Yeah, so when I introduce you, I'm just going to, because time is short, I'm
Sure.
just going to say you're president of Collins and Company, you're a
Great.
registered investment advisor and
Yep.
certified financial analyst, and you have your MBA in finance from Golden Gate University.
Great. Thank you.
Okay. That work? All right. You guys ready?
Ready.
Yep.
Okay. Put this bad boy in.
Oh, the memory stick.
Yeah.
Did it all get dumped onto the memory stick?
And we do the
Well, I
whole
do-
show and then be like, you know.
So I send it to the studio, and
Memory.
I keep it on here and there, just in case. You know,
That way, if one gets lost.
that's it. If I lose the stick, at least I got the computer.
Right?
Okay, you guys ready?
Yes.
Ready.
All right, okay, we're going to do our 5-second. Here we go. Welcome, you're listening to The Best of Investing, sponsored by Pacific Trade Exchange. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here is our format. A few guys sitting around a bar having drinks or without the drinks, talking business with you, the audience, listening in. I'm your host, Edward Brown, and I'm honored to have as my co-host Mark Hahn from Pacific Private Money, California's fastest growing private lender, and Brian Burke of Praxis Capital. Our phone number is 888-912-1190. Now write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is movies with gangs in them. Ooh, scary.
Nice.
Colors.
Okay, oh yeah. Now you're giving away all the answers.
Oh,
no, that's
yeah,
not one of them.
getting ahead
Okay.
of myself.
Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also recording this for television on Marin Channel 26. We'll find out when it's going to be recorded or aired. So just keep checking Channel 26 all the time. And if you want to record our show in the future, use a website called dar.fm and type in The Best of Investing. Last reminder here, World Wraps in Corte Madera in Santa Clara is still giving our listeners a free smoothie with the purchase of a wrapper bowl if you mention The Best of Investing. Go there for lunch today, best wraps in town. Okay, we have a special guest, and his name is Bruce Robbie, and Bruce is president of Collins & Company, which is a registered investment advisor, and he's also a chartered financial analyst, and he went to my alma mater, Golden Gate University. Bruce, welcome to The Best of Investing.
Edward, thank you for having me today.
Okay, Girthen, you're very welcome. All right, what pearls of wisdom are you going to share with us?
Well, you know, Edward, I spent the last 2 decades working with families in the Bay Area and private foundations, helping them craft wealth management plans and investment strategies that help achieve their long-term goals. And one thing I've noticed is people are not good at planning their investment strategies. And I often think of the Costco analogy. I'm not sure if you ever go to Costco. Have you been there?
Sure.
Of
course.
Great
Hey, that was my first date with my wife.
I love Costco.
I said, hey, baby, I'm taking you out to dinner. Let's go to Costco.
The beauty of Costco is you walk in and everything you see you just have to buy, right? I'm that way. I go in there.
Yeah,
I can't get out there for
pretty
$500. You know,
Wow.
walk in. There's a new TV, the DVD player, the 3-gallon jar of peanut butter, and oftentimes that's how people invest their money. They just look at things, and then they say that looks good. I'll buy that. And so what I've
Apple.
learned over the years is you got to step back, and the most important decision we make in investing is our asset allocation, and that's where we put our money: stocks, bonds, cash, real estate, commodities, or other options. And people don't start there. They start at the end by investing in a kind of a haphazard fashion, and they end up with a haphazard strategy. And so the advice I can give all listeners is to be very cognizant of understanding where your money should be first in what asset class, and then decide inside that class how to invest.
Okay. Yeah, because I remember I got a degree, CFS, Certified Fund Specialist, and Modern Portfolio Theory, and all this real fancy stuff. And it was interesting because they were talking about diversification. Diversification is not, I own Ford, GM, and Chrysler. You know, it's all the same segments.
Throw Toyota in there. Then you're
Yeah, that's right. And don't
Hey,
put all
Bruce,
your-
while we're talking about asset allocation, isn't it a little bit different for, for example, you're here in Marin County, and there's a lot of pretty wealthy families, but some of our listening audience, is probably might not qualify for, some of the wealth management folks that you work with. Isn't, if you've got, millions and millions of dollars, in this low interest rate era, and you're in the positive, even if it's just a couple of percent, you're still doing okay for yourself. But what about people that are trying to figure out, my gosh, how am I going to live on my investment income in this era of low interest rates?
That's a great question, and it's interesting because some people have that attitude. Well, if I don't have much money, then I need a different strategy, and that may be the case. But oftentimes, you meet people that have accumulated a great deal of wealth, and they shouldn't be taking a whole lot of risk with their money. They need to protect it and preserve it and grow it slowly. then on the other end, you have families that have accumulated a small amount of wealth, and guess what? They can't lose it. And it turns out that their risk tolerance is almost the same as somebody that's accumulated quite a bit of wealth, because they really can't take a great deal of risk and grow it either. So it turns out that the strategies we're going to talk about today are quite applicable regardless of your financial condition.
Let me ask a follow-up question there. Talking about low interest rates, why are interest rates so low right now?
That's a great question. And why are they low? Partly because we know that the short-term interest rates in our country are controlled by the Federal Reserve, who has the ability to set the lending rates that banks borrow money at. And most rates are keyed off of those short-term rates. And the longer-term rates are driven by the marketplace, but the short-term rate happens to be kind of the starting point for all rates. And that's why we look at mortgage rates today at 3.5% for a 30-year fixed-rate mortgage, and we see the money market rate at 0. And that can be a real challenge, of course, but the Federal Reserve is holding down interest rates to do two things. One, to keep the economy recovering. We're in a very, very gradual and volatile recovery. It looks like things are going to get better, employment's picking up, but it's unstable. So by making money virtually free to banks to borrow, it helps promote business activity.
Yeah, how much of it has to do with supply and demand?
Well, the overnight rate set by the Fed is not supply and demand. That's just set.
Yeah.
The demand is everything beyond that. And the reality of it is the dollar is still king in the world, and that's why the 10-year rate is at 2%, because people are dying to invest their money in our dollars when we look at the Treasury rates.
So what does all that mean for the average person?
Well, that means if you're borrowing money, this is a great time to look at your mortgage and consider refinancing and take advantage of these historically low rates for refinancing. It's a little harder to qualify today, but for owners of homes that have income, it's a great opportunity to set their mortgage interest level at a record low. If you're trying to invest money, you've got some real challenges if you look at the traditional investment strategies. But luckily, there's all kinds of alternatives now that create significant income above that 1% we're seeing for a 12 or 24-month CD. And that's kind of where we try to place our clients.
Okay, and you had answered one of the questions I was going to ask you, so I'll ask the other one. How are you positioning your clients' investments to generate income?
Well, I think today we have to look at different strategies and combine them, because we're just not sure what's going to happen next in the economy. I think we all know things are feeling better. They could get a lot worse, and they could gradually improve. So we use a variety of strategies. We look at high-yield bonds, for instance, is a great marketplace right now for clients to put some of their money, because high-yield bonds are yielding close to 7% right now.
Would that be triple B bonds or what?
Well, they technically, I don't like to use the word junk, but yes, that would be bonds that are not investment grade rated.
Well, in theory, if the economy is going to get better, then those high-yield companies, let's just call them, should be a little bit safer
They are
in the
safer.
future.
And in fact, we know today that public companies have more cash in the banks than ever before in the history of the history. So we know public companies have a great deal of cash, and that gives you some comfort with the high yield companies. If you use an exchange traded fund, that we're quite fond of that sort of investment.
Yeah, because the
option.
expenses are really low on those.
They're low, and you can get a diversified portfolio of high yield bonds and mitigate the risk of any one particular bond not doing well. So that's close to 7% yield and quite attractive.
Do you like munis at all?
Actually, muni bonds are interesting. There are some muni bond funds we're quite fond of. Nuveen, for instance, is a great family of funds, and we have some Nuveen funds that we use with our clients that are yielding 6% right now, and that's double tax-free.
Yeah.
So that's an effective tax return of about 10%.
And would those be high-yield bond?
No, the Nuveen, well, every Nuveen fund you have to look at, but these are all generally California municipal bonds.
Single A or?
They have a variety of ratings. Again, when you buy a fund of bonds, you get the diversification benefit, which we think is essential, as opposed to buying an individual municipal issue. Also, municipal bond funds, and people need to understand this, oftentimes use leverage.
Oh, interesting.
And most Nuveen funds use about 40% leverage. They borrow 40% of their money and buy more municipal bonds to ramp up your return. So there is a higher risk, but they're actually, if you look at the return profile, it's quite attractive.
But then how does that work? Because the interest being tax deductible isn't. If you're,
It is. No, it's still double tax free. They're buying municipal bonds, so with the money, and that's the income they're distributing. So
I'm surprised they can borrow money cheaper than bonds. The municipal bonds are going for, because the rates on these things are fairly
and
low.
how do you borrow? But they must be borrowing from municipalities, because you can't borrow from a bank and pay interest to a bank and get the tax deduction for interest paid to a bank
Well, I
for
don't
buying
know.
munis. You know what I mean?
Yeah.
It's too good a deal. But anyway, it's,
the point is, if you look at municipal bonds, these funds are a great way to be diversified, and the way you can get that approximately 6% double tax-free return is by these funds taking on some leverage to kind of ramp up the return.
okay, we are in the studio with Bruce Robbie, who's president of Collins and Company, and when we come back, we're going to get into some more asset allocation and other advice for the listeners. We're going to cut to our first commercial break, and the theme again is movies with gangs in them. All right, ready? Okay, what movie in 1979 featured gangs such as the Riffs, the Orphans, and a gang dressed like the Yankees named the Furies? Hint, the name of the movie is the main gang that tries to make its way back to its home base in Coney Island. The first three callers, in fact, I remember this movie was banned for a while because there's too much violence in looking at it. Okay, the first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What movie in 1979 featured gangs such as the Riffs, the Orphans, and a gang dressed like the Yankees named the Furies? Excuse me. And hint, the name of the movie is the name of the main gang that tries to make its way to its home base in Coney Island. 888-912-1190. Make sure to include your name, address, email address, and speak slowly and spell it out for us, and we will be right back. Excellent.
Warriors,
That's
come out to
I know. I was going to say that. So that's right. Warriors come out to play. So you remember?
Was
You guys remember that?
Wasn't that Sean Penn? who
No.
played that role, or was that
Michael Beck.
Oh yeah, it was a
Guy
Sean
named
Penn
Michael
lookalike.
Beck.
Yeah,
Yeah,
that's right.
that's right.
I always got it mixed up with those.
Crazy.
Sean was in Fast Times at